Obviously you can, right? But I think we're always in long. I just don't know how far down the pullback will go. Usually the first reversal attempt in a bull trend is bought, but the stop is so far below, I'm not going to buy the 7 low. A big tail down on 6, big tail up on 7. We may go sideways here. Still always in long. Minimum stop for the bulls, probably below 6. I heard someone on television say that the sell-off is due to Ebola. And to me, that's nonsense. I've been talking about the sell-off for months. All right? It's purely technical. You have a very overbought market. Does Ebola influence it? Sure. Right? Does the Fed policy influence it? Yes. But, so that might influence the speed with which all of this is happening over the past couple of weeks, but it does not alter what was going to happen. And nobody knew if it was going to be something in the Middle East or something in North Korea or Ebola or something else happening while this is happening. And whatever news event was happening while the stock market was selling off, television would say, that news event caused it. But the news event did not cause it. What caused it was the overbought condition that I talk about in my posts. When the market gets extremely overbought, there's no one left to buy. And as it starts to go down, those who are long realize it's overbought, and they start to take profits. And then you get bears seeing the momentum caused by the profit takers, the momentum down, and they start to sell. And then everyone's selling, bulls and bears, and you get a very sharp sell-off like this. Not a good-looking signal bar, but still always in long. Not a good signal bar for the bulls or for the bears. For the bears, parabolic wedge top, possible high today. If we start to get consecutive bear bars, especially big bear bars closing on their lows, we might get a short out of it. Probably sellers above 8, but we're always in long. So I think, it's probably better not to short. What about buying above 8? You need a swing stop. I mean, a big, big stop, somewhere down in the middle of this leg up, so somewhere down here. This reversal looks like it's in all sectors. They're buying everything, tech, financials, energy. And all those markets are very oversold. Here's Yahoo. Very similar to a lot of things in the tech market. Intel. XLE. This is the chart. XLE. Right. Big reversal, very steeply down. Exxon. Right. Crude oil. And as I said, huge volume here. All day, huge volume. So you got huge volume at a very low price. That means traders see that low price as value. And I think we'll probably bounce. Today will probably be an important price for the next day or 2 or 3. Maybe it's possible that's the end of the correction. Here's the daily chart, weekly chart, monthly chart. Daily chart, we're far below the 200-day moving average, but all the moving averages are rising. So this is basically a gap bar situation, a buy. The market's down so steeply that it's unlikely it will just go straight up. Right, it probably will have to form a base. And that's true on the 5-minute chart as well. I have the open of the day for the measured move. I think that the high of, I think this is probably more like it. Looks like we're trying to get above yesterday's low. I think there will be some selling here. Some of the bulls who did not take profits on 7 might take profits up here for a micro double top. So what about shorting below 10? Micro double top at the moving average, parabolic wedge. I don't know. I think we're going to probably pull back. We might pull back to below the 1 high. Today may end up as a doji day on the daily chart. Right, so we may end up closing near the open of the day. To be honest, I did sell up here, taking a chance that we were going to pull back. Shorts and a bull are scalps. And everything's happening so quickly, I'm already out. I'm looking to buy again. 60-minute chart. We're probably working on the close of the 60-minute chart. Like I said, today may end up being an island bottom on the daily chart, and we may end up closing near the open of the day. The open of the day is right around the middle of the day's range. Can it be a bear trend day? It can be, but when a reversal up is this dramatic, it's probably either going to be a bull trend day or a trading range day. Looks like we're starting to go sideways. Doji 6 and 8, reversal 9, 10. So it's a 2-bar doji, right? We're still always in long. Very profitable open for traders who were able to trade it. A lot of the traders are, fairly exhausted, right? They made a lot of money, and they're taking a break. For the bulls, high to buy, 8 and 11, but same problem at the moving average and still below yesterday's high. So yesterday's low. So a lower probability buy. Clearly always in long. Right now we're working on the appearance of the 60-minute bar. Closes in 5 minutes. Bulls would love the bar to close on its high, and then for the day to become a huge bull trend day. A lot of bulls right now are waiting to see if we get above yesterday's low, because they realize this low might hold all day, and if they're buying up here, it may just go up a little bit and then trap them. Tail, right, conspicuous tail, lowers the probability of the buy. Still always in long, but right now I'm going to wait for either a stronger looking buy or for a breakout above yesterday's low. For the bears, a parabolic wedge, so they're looking for 2 legs down, and we've had 1 leg down to the 11 low. Confusing, so that tells you trading range behavior here. I mentioned that I sometimes get thank you letters from traders, and I got one yesterday from a trader who said that he had his first $20,000 day yesterday. $20,000, it's a multiple of 5, and for traders, 5,000 is, I think, a magic number, because if you average 5,000 a day, you make $1 million a year, And if you average any multiple of that, then you make a multiple of $1 million a year.